What is good, guys? It's Rey-Jay back with another video, and in this one I want to break down what's going on with the overall market, how SPY, Tesla, Nvda, the QQQ, and a couple of tickers are looking. I'm going to talk about some very important levels to watch for using both Webull and also TradingView, and break down some very important targets and levels to watch for the markets. But before I do anything like this, before I get into any more details, let me just mention a couple of things. I'm firstly not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks. The offer ends in just about 12 hours, so check it out before they run out. Anyways, let's break down what's going on with the market. So today was a very crazy day if you think about it. In the morning, we got this very nice gap up as we expected and a drop. We were talking about this drop coming in the markets. However, instead of just continuing to drop, the market ended up seeing lots of buyers stepping in. It just kept pushing, and we saw a lot of shorts get squeezed. We started to see the market pushing very hard. Now, the question is, will the market continue like this, and why did the market do this? And honestly, guys, the market could be very irrational. Sometimes crazy things could be expected. Because of the fact that retail sales went up, the market is celebrating. But you have to remember that the inflationary data was bad. It wasn't good whatsoever. We started to see more and more increases in PPI, not to mention the fact that the jobs numbers were just decent. So even if we have not so good inflationary numbers, the market makers could continue to pump the markets regardless of what anyone tries to do, regardless of if data is looking bad. And the best thing to do in a market like this is not really complain, not really cry, but just to accept it, look at the chart, read it, and then trade based off that. Be as unbiased as possible. So I just want to mention that for tomorrow, we have a lot of options expiring. We currently have about, this is like close to 1.6 million puts expiring. I think almost that many. And then we have about 3.5, a little bit more than that, 3.5 million puts expiring. So the majority of the calls expiring, we have about 1.5 million calls and about 3.5 million puts expiring. So that's a 2.27 put to call ratio. Pretty crazy stuff overall. And the majority of positions are going to be on the put side. Now, with all of these puts expiring, the real question that emerges is, are the market makers going to try to squeeze shorts? We're well above max pain, so they don't really have to squeeze the market extremely hard. But there is a possibility of that, and I want everyone to be as prepared as possible. Because on SPY, you could argue that we have this rising wedge that's forming. I could actually pull this up on TradingView. And that makes me a little bit cautious, but as of right now, there's no sign of it playing out, and it's continuing to remain more bullish. Now, does this look like a very clean rising wedge? I wouldn't necessarily say that, because we're sort of trying to break this trend line right about here. So we could try to draw it like this, but like I said before, don't expect a rising wedge to play out unless we truly get the break, and there's no sign of much of a break so far. The market is continuing to remain very strong. And even if this is a rising wedge, this looks like it could just continue into tomorrow before we get some kind of break. So you never know, right? You just want to read the chart just for safety. But on the bigger trend line, you will see we have this cup and handle on SPY, a very nice accumulation structure. And like I said earlier, when you look at the MACDs on the 30 minutes time frame, this almost got a bearish cross, but it failed to do so. Instead, the bulls took over, and this looks bullish, right? I know this is kind of small. I'm sorry about that. But look at this. This is bullish looking. It's just continuing to pump. There's no sign of weakness. It looks bullish overall. The 4-hour time frame is also looking bullish on SPY. This was ironic because we weren't expecting it to pump this hard after bad inflationary numbers came out. And yet the market continues to do so. So we just have to accept it for what it is and just know that as of right now, we're looking bullish. So how could we turn bearish? Well, I'm not going to count on any kind of drops as being a true bearish break. I would say look at the MACDs and look at the overall trend. So far, the trend is favoring the bulls, so we're just going to favor that for now. And as of right now, it looks like the market could pump higher. It's continuing to hold up nicely. Looking at Tesla so far is continuing to look strong, and we have this potential accumulation structure that is developed on it. Tesla's holding up very nicely, and it's looking like it's on a very strong uptrend on the 4-hour time frame. Tesla's also looking strong. It's continuing to maintain above 275, and that's the more bullish case. It does have potential to push towards 277 to 278, if not 280, as long as it remains on this uptrend, which it's still doing so far. So Tesla is also looking bullish. If you look at the current technicals, There's nothing too weak about the chart just yet. We have a potential bullish wedge developing too. As of right now, Tesla looks pretty darn good. Let me just zoom into the current day. You can see right here, it's just continuing to uptrend. Very strong, testing these resistance levels. Not bad from Tesla whatsoever. Looking at Aapl, I want to talk about Aapl now. Aapl had the head and shoulders that developed on it, but Apple's making attempts to make higher highs and higher lows. We're starting to see signs of a structure shift in the trend. That suggests that if Aapl manages to get above its 0.618 retracement area, which is very close to 176 to 176.5, like all the way up there, we could see Aapl start pushing into the 177s back to this top right over here, which could push the market higher. Aapl is showing a sign of a change in market structure. And if we look at its MACD, it's also looking quite nice. So if you look at Aapl, we're about to get a bullish cross on the 4-hour PPO. And when you zoom out of the charts a little bit, I'm sorry if this is kind of small, but I just need to show you this. Right here, and right here, when we get these bullish crosses, we tend to see Aapl bounce, bullish cross, it bounced. We got a small bullish cross right here, and we got a small little bounce on Aapl. So like from right here for 2 days, Aapl held up. And it started to slow down like after the third day. So now we're about to get a bullish cross, which suggests we might see a little bit more upside for Aapl. That could help the market push. Nvda is still looking kind of flat, but like I said about Nvda, we have a potential inverse head and shoulder that's developing on the chart. That's looking pretty good so far. This is what it's looking like. So you can see we have this potential inverse head and shoulders that is developing on it. We expect it to kind of like range trade between the 200 and the 50 for an extended period of time before we get some kind of bounce. The 4 hours looking kind of flat, not extremely strong, but the overall pattern is showing some strength as Nvidia is trying to make higher highs and higher lows. So I want to show you something very important on Nvidia. Basically, we had this trend line, right? This was our resistance. Let me zoom out just a little bit more. This trend line was our resistance for quite some time. This is where Nvidia was getting those projections historically. And we didn't just break this trend line. This yellow trend line broke, and then Nvidia did a back test. So this is what typically happens during these breaks with the long wick. This was another liquidity grab. We got a back test from here, and then we bounced off of it. And this was establishing the right shoulder. So we have like a left shoulder here, a head right here. Now our right shoulder is starting to give us some life, which means Nvidia may get a breakout soon. So there's a possibility of that, but we need to see Nvidia break and hold 465, and then we could go to fill this gap. Overall, it looks quite decent, and it looks like there is some potential for upside. Before the upside comes, though, we need to see Nvidia hold 452, balance, and just remain in this trend for some more time between 452 and 462 to 464. So this trend right here, we need to see Nvidia hold this for some time, then eventually break above 465 to break out. As of right now, it looks like it could be developing a right shoulder, so there is potential for it, holding up quite nicely so far. Looking at something else like the QQQ, this is the last one I'm going to talk about for today in this video before I release my second video of the day. We have a nice cup and handle that developed on it. And this was a little ironic. Like I told you all, Aapl was looking weak initially, but now Aapl is trying to balance with all this data that came out. The market is it's nitpicking one decent piece of data and trying to pump off that and sort of just, disregarding, the other pieces of data, which are not necessarily the best, giving us signs that inflation may increase. Market doesn't care. It's going to try to keep going. So if that's what the market wants to do, then so be it. But the point is, now we have this cup and handle like structure, and Nvidia is getting some nice strength. Not Nvidia, sorry, the QQQ is. Looking at the MACD on it, I have my charts somewhere here. I sometimes get lost when I keep looking at all these different tickers. But anyways, QQQ looks pretty good so far. On the 4-hour, it's turning bullish with the cup and handle structure developing. If it breaks 378, we're going to push to the 380s. That could happen relatively soon. So long as there's no bad news tomorrow, we could see 380 coming. It looks bullish. The 30-minute looks bullish. It looks like it's going to try to keep going. So if you look at it, we have this nice channel that has developed. Could we kind of like cool off tomorrow to test like this part of it? Yes, but it could bounce off that and just start continuing to go higher into that like 380 area. It looks bullish overall. A nice cup and handle is developing on it. So I just want to make it clear, guys, that the market is continuing to hold up. The market is still showing strength, and there's no true confirmation of a break at the time I'm recording this. For us to turn bearish, you need to see the market start sinking, and we need to see these bearish signals on the MACD, also on the 4-hour time frame. As of right now, it's all looking strong, and there's no true confirmation of it breaking down, and the momentum is shifting in favor of the bulls. Okay, that's my honest opinion. When I zoom out of this chart, you could even argue that we have the cup and handle accumulation structure, which would push this towards, this 380 area. So technicals look bullish. Overall, the trend is still strong. The market is holding up despite the bad data that came out. And we're just going to be watching these levels very carefully. We cannot truly turn bearish at this point until we truly see the PPOs flip, until we get some bigger sell signals. As of right now, we're not getting them. Could we pull back like 20 cents, 30 cents on SPY? Yes. Could we pull back a somewhat small amount? Yes. But the overall trend is still going to remain bullish until we start to see a big shift in market structure. And getting a tiny little pullback like that is not a shift. That is what I'm trying to refer to. It's still looking strong, and now the odds are starting to favor the upside. Okay? So hopefully this video is as clear as possible. Thank you all so much for listening. I know it's not always what we expect, but we just have to go with it. Continue to adjust and remain strong and resilient no matter what. Thank you, and peace out.